Hey guys, what's up? Alec back with the daily stock market, and what a rocket ship green day of a Friday we had. Lucid up 43%. Now in the last video we did a full stock market update, so make sure you check out that video if you want to hear about Lucid skyrocketing 90% on Friday and the other stocks that had a great Friday. But in this video we're going to be talking about the earning week ahead. We have some big stocks reporting earnings this upcoming week. Monday starting it off right. We have SoFi reporting, which is going to be a very interesting one. Canon, Philips. After the close on Monday, we have Whirlpool, we have HP. And then this is when it starts to really heat up, is Tuesday before the open. We have a big oil company reporting, ExxonMobil. We have a big shipping company reporting, UPS. We have GM reporting. We have Pfizer, Caterpillar, McDonald's, Spotify, another two oil companies, Phillips 66 and Marathon Oil, all reporting in the same market open on Tuesday. So prepare for Tuesday, strap in because it's going to get crazy. Now on Tuesday after the close, we have AMD and Snapchat, which are two huge earnings. Snapchat usually moves around 20% on earnings, but there's a chance it could even move 60% or so or more on earnings. And it'll be interesting to see what happens with AMD because they are on my watch list right now. So if they drop, have a big drop, then I'm going to be definitely interested in picking up some shares. But make sure you subscribe with post notifications on because we're going to be doing another updated video on all these stocks that have reported earnings. So if you want all the earnings updates, make sure you subscribe with post notifications on. YouTube.com/the daily stock market is the only place where you can find the full length videos. Now Wednesday, before the stock market opens, we have Waste Masters reporting. We have T-Mobile, which is a huge telecommunications company. Verizon already reported, so that can tell us a little bit about T-Mobile. We have Peloton, which was a company that was running into bankruptcy fears. We have, after the close, we have Meta Platforms, which, looking at Snapchat after the close on Tuesday, could tell us a little bit about Meta's earnings. So we can even see them trade in sympathy with one another. We have Elf, which is a makeup company, Allstate reporting going over to Thursday. We have Honeywell, Hershey's, Sony. After the close is when it gets interesting though, because we have Microsoft, Apple, Alphabet, Google, Ford, and Qualcomm Starbucks all reporting on the same market close. So get ready for Tuesday and get ready for Thursday as well, because that's going to be a wild ride with Amazon, Google, and Apple all reporting in the same market close. Now, it's a little bit too late to talk about SoFi because they're going to be reporting first thing in the morning, Monday morning, but we saw them up around 8% on Friday, and we see them up 43% in the past month. We are buying SoFi pretty heavy, around $4 per share. If you check some of the videos or if you're a long-term subscriber, you remember me talking about SoFi under $5 per share. So now that's paying off, a nice swing trade up 43%. Okay, now with that being said, I think they're going to head back down. They're at $6.19 per share right now. I think they're going to go under $5 per share once again. So a swing trade on SoFi, I'm looking for around that $4 range, under $5. And I want to sell above $6 once again. Next up, we have Spotify reporting Tuesday morning, Tuesday AM. Okay, we see them up 31% in the past month. $80 per share, $75 per share. I think it's a lot more fair on Spotify. In the last 5 years, we can see that they were as high as $364 per share. And since then, they're still down 70%. Right now, they're sitting at a non-profitable company, $19 billion market cap, and their EPS is getting worse and worse as time goes on. They were briefly a profitable company in Q1 2022. However, that has deteriorated very rapidly. Now, with an expected EPS of negative $1.40, that is absolutely horrible. I probably honestly wouldn't even buy Spotify at $80 per share, but I'm definitely willing to revisit them at $80 per share. So I'll set a price alert to revisit them. We'll make another video and see if they're a good deal and if things are picking up with their profitability by then. So make sure you subscribe with post notifications on so you don't miss that update once Spotify hits our price target. Okay, so let's talk about AMD just a little bit, up 19% in the past month, up 27% in the last 3 months, and with a whopping 1,000% returns at its peak of $155 per share. AMD was a roller coaster ride last year. It's now sitting at $75 per share with a PE ratio of 45, which is one of the lowest PE ratios that it's had in recent times. Now, here's a very interesting article. AMD earnings face even more scrutiny after astonishing bad Intel outlook. A quarter ago, CEO Lisa Su had promised AMD would certainly exit the year in a better place, but Intel's inventory and data center problems have made analysts less certain about its rival. And remember, AMD's reporting Tuesday after the close. Doubts about data center demand and the cost of excess inventory have grown, though, after Intel's reported earnings that showed inventory clearance was gutting gross margins, and as the CPU maker faced the worst PC shipment declines in record history. Intel said it's expected the overall data center market to fall at an accelerating rate. So if AMD does fall, I'll be interested in picking up some shares. I want to get some lower than it was in October, so around $55 per share. I'm going to put my price alert around $57 per share, and I'll actually be buying shares around $57, $55. Probably buy like 10 shares at $55 per share for the long term, because AMD is a company I definitely believe in. They are a profitable company, by the way. I also believe in the chip sector overall for long term, like AMD, NVIDIA, especially with the rise of AI, smartphone use, computer use, manufacturing of chips, and all those sorts. And let's talk about Snapchat, up 7% on the day on Friday, up 26% in the last month. And they are struggling, of course, in the last year, down 61% with a market cap of $17 billion. Snapchat is gearing up to report Q4 earnings. What's in the cards? Snapchat's set to report results on January 31st. Factors to note: Snapchat has been benefiting from a spike in usage of Snapchat. The growing adoption of Snapchat among the Gen Z population is expected to have driven daily active users, thus expanding the company's advertising base. In the third quarter, Snapchat subscriber growth reflected daily average users increased 57 million on a year-to-year basis. Daily active users at the end of the third quarter were up 363 million, 18% year over year. So it's looking pretty good. The Zacks consensus estimates for the fourth quarter global daily active users is currently pegged at 376 million, indicating a 17.9% growth from a year ago quarter. Moreover, Snapchat Plus premium subscription services have gathered initial success, which is expected to have aided the top line growth. The Snapchat Plus subscription service with exclusive experimental and pre-release features have reached more than 1.5 million paying subscribers in the third quarter and is now offered in 170 plus countries. On October 20th, Snapchat announced this new feature. Blah, blah, blah. Snapchat has been focused on continuously adding innovative features like Lens Studio 2.0. In the to-be-reported quarter, Snapchat announced partnership with Amazon fashion partner to bring millions of Snapchatters new virtual try-on VTO experiences, expanding augmented reality AR for both brands and customers. In the fourth quarter, Snapchat announced its fifth lens, blah, blah, blah. In addition to strong adoption of AR lenses, the Discover content and shows are expected to have driven more user growth. The growing Snapchat original content is also expected to have bolstered. So Snapchat is the first advertising company to be reporting earnings, so they're going to be very scrutinized. All eyes are going to be on them. A steady yet slow ad spending environment is expected to reflect on Snap's fourth quarter top line numbers. Advertising has been the only source for Snapchat's revenue, which has been facing significant competition from the likes of Meta, Instagram, Facebook, and Google, YouTube, Google advertising for ad dollars. A persistent decline in the price per ad impression is likely to have dented advertising revenues for the company, which is a very, very bad thing because that's their main source of revenue and income. Meta is pumping resources into developing AI to address situations, so is Google. Snapchat is also giving competition to Facebook or Meta in the metaverse space. So overall, there is a lot of things to consider on Snapchat, but it can make a big, big movement one way or another. If you want to know exactly what I'm doing, make sure you message me on Instagram. I actually shut down signups to my close friends list for a while because we were getting so many signups at once for the new year. Everybody was renewing their budgets and wanting to invest in the stock market as it turned mega green. Okay, but I did open up that wait list. So if you want to be first on the wait list when I open signups back up, make sure you message me on Instagram here, the Daily Stock Market, to get on that close friends trading list. This week is going to be a major week with huge companies reporting earnings, so we're going to be making lots of money in the stock market. If you want to see what we did last week, go ahead and click on success number 7. Read the most recent ones. Lots of money has been made, and I want you to be the next success story. Thank you guys for all the love and support you've been showing on Instagram and YouTube. Share this video with a friend, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.